Well, President Trump has announced that they want to look at capping credit card interest rates at 10%. And it's pretty interesting because right now I think the last I saw the average credit card interest rate is like 24% in the US. And then you think about two-thirds of American households carry credit card debt. So, and that may be with a revolving balance. There's a lot of people that are paying maybe this average of 24% interest. And that's a huge interest rate that's really going to get in the way of building wealth long term. But what a lot of times we might jump to mentally is we might say, well, what kind of relief will that provide me if it goes straight to a 10%? But I think what sometimes people may not be thinking is how that will affect the long term of being able to even get credit. Because like anybody who applies for a loan, the five factors that, well, there's a credit score that they get, and that credit score is based on five factors. The biggest ones being, do you pay your debts on time, and how much total debt do you have? But when people don't score well on those right now, they can still get approved for a loan from a bank or, a credit card, whatever. The bank is just going to say, well, you're riskier, so we're going to charge a higher interest rate. Where we're going to end up is if it's capped at 10%, which right now you would have to have like superb credit probably to get a 10% credit card interest rate. That's, maybe there's intro rates of 0% or whatever, but to have a just standing 10%, that's people with really good credit right now. So if they force that by law, then we would probably see, at least in an in-between time, a lot of people who no longer get approved for credit cards because their credit profile it doesn't look like it would justify that lower interest rate. And so they're going to have to come up with new mechanisms, or we'll see them charge higher fees or more costs, like more higher annual fees on it or whatever. So it looks like an immediate band-aid, like it will feel good right away, but long-term could have some implications. I don't know, Blaise, if you see it different.
No, I think the implications are probably the same. I guess what I think is interesting is how we evaluate the outcomes. I would add to what you said, some of the other likely secondary effects of this would be rewards being cut on credit cards as well, right? Because rewards are paid for really by folks that are paying the higher interest rates. Because if you look at rewards cards, they're typically for, what you were mentioning, folks with higher FICO scores, with higher incomes. And those are quite literally subsidized by people who are paying the highest interest rates on their credit cards. So you'll see some of those secondary effects. I guess when I hear it and the conclusions I draw are different from a personal finance standpoint, and you touched on it originally. In no world is carrying a credit card balance at 23, 25%, whatever, good, right? You can't build wealth that way. I can only imagine Dave Ramsey's jumping up and down talking about how great this is to help people, but it's all in how it's cast, right? This will certainly be discriminatory, if you will, towards folks with poorer credit, with a worse credit score. But the argument could be made, and I think I kind of sit in this camp. If you're already having financial difficulties, the last thing you probably need is to be carrying more debt on a credit card that you can never unbury from, right? Interest rate, let's just use easy math, is running at 25%. And I'm going to oversimplify this. And you've got $100 on a credit card, then every year you're paying $25 in interest. Now, it's more than that because credit cards actually compound usually on a daily or monthly basis. So that effective rate becomes much higher. But let's just use simple interest of 25%. Most credit card minimum payments are 1% of the balance. So if you have a $100 balance on your credit card, you're paying $1 a month. And of that dollar, right, each month, you've got 25%. So $2.50, or excuse me, $25 divided by 12. So let's call it about $2, a little more than $2 a month. That's being added in interest. Well, that math doesn't work. You're never digging out from that hole. And that has a significant effect on folks that can't pay more than the minimums and can never get out from underneath that. Cutting interest rates on credit cards, I think in a general population is probably a good thing, but it turns the paradigm on its head because some of the best marketers we have in the country are banks, right? Right behind them are real estate agents, right? And so the banks will tell you how important it is to have credit cards, to build your credit score, to be able to borrow more money. So that's where I think it's really interesting is it's going to, on the surface, look like it hurts probably the most vulnerable part of our population in terms of income. But I would argue it's a very good thing for personal finance and long-term health and wealth building. But you're going to have a lot of folks that are, kind of pushing back and forth on that. The Consumer Federation of America actually said that even with a 10% cap, credit cards will remain one of the most profitable businesses in banking. They still estimate it would generate $150 billion just with swipe fees. So, even at that, the reliance that we have on credit cards as a country is significant and won't go away. But again, you'll hear the banks really jump up and down and scream about how it's going to be such a bad thing. But really, I don't know that it's bad for the consumer as much as it is bad for business.
Yeah, and that's kind of what I was thinking is I think we're going to be more of like because I think when the credit spigot, this is the easiest form of credit for a lot of people for spending. Like it's just a very easy form for most people to be approved for and to be able to get. And when that closes off, it's going to present a lot of people with one of two options. So like I said, short term, I think it's good because if you're paying 24% interest and you're trying to get out of credit card debt and it goes down to 10, it's going to have a big impact on your ability to do that. But the bigger problem is we're spending more than we earn. Right. Like if this is the household, then we're spending more than we earn. And this is the bigger problem. So now somebody's going to be encountered that they're going to have this choice. I can't, because I think banks will adjust credit standards. They're going to adjust how that's going to look. So it will close that spigot. Even if like I was approved for 20,000 before, but now they're going to approve you for 8 because that's how they'll compensate for your higher risk. They can't charge you the higher interest rate, so they'll reduce how much you're allowed to borrow, right? So there's going to be these compensating balances to make up for the lender. So I think that it's going to make people come to a decision of saying, do I just spend less or do I find alternative ways to borrow? And I think that's where we'll probably end up is I think that I wish people would just spend less like that. I think actually as a country and at household levels, if people would learn to control the spending and be able to save, like we would build unbelievable wealth and it would have a total transformation, I think, in the country in a lot of ways, which would be great. But I think it's less likely that that's the path that most people will go because we have just gone through high inflation, healthcare costs are rising. People feel like pay is not keeping up with that. And so it's easy to kind of justify, I just have to do what I have to do. And so I think actually what we'll see instead is we'll see a spike in alternative lenders that'll pop up.
Yeah, and the payday lenders. And interestingly, upon this announcement, Affirm stock price skyrocketed. It went up significantly. That buy now, pay later.
You just pay on credit that way. Yeah.
Right.
I think that's what we'll see is more of that stuff pop up.
Absolutely.
This is a crazy thing. I was at the store with my wife a while ago and I don't remember what we were looking for, but I was just kind of looking around. I like cooking, so I was looking at some like cooking stuff. And I saw a set of pots and pans, and I was trying to identify like how much it costs. I could not find a price. Everywhere that it was listed, it only listed it as a monthly payment option. I could not find a one standard price. And I just thought this is crazy. This can't be, this is not the right way for us to run things. And it's just totally going to be in the way of people building wealth and having the futures that they imagine or want to have.
Yeah, a lot of those too, which goes back to the psychological piece. They don't even give you what the interest rate actually is. They give you that monthly payment and they say, oh, it's 4 easy payments of blank. And if you can figure out what the cost is to buy it outright, and then you reverse engineer that math, you then realize that your interest rate, which is not stated, they just say it's these 4 payments, is significant in that transaction.
Well, this past year we had to replace an HVAC unit at our house, and the company that did it, they were great, no problems with them, like everything, happy with all that. But when they talked to me about it, they said, how would you want to pay for it? And I said, well, what are the options? Do you have any 0% interest option? Because if they're going to give me 0% for a couple of years, I'm just going to take that because I can earn 4% in a bank account. It just makes sense to do that. And they said, yeah, we do have a 0% interest. So you can finance it for 0% interest, but here's the price of the HVAC unit. Or he said, or if you just pay it up front, it's a different price. So it's technically 0% interest, but they're just charging a higher price for it up front. And if I did the math of it, it still was like, it'd be like 8 to 11, something like that, percent interest inside of there. And I thought, well, that's not really 0%. So I think people that don't live in finance or think in finance all the time sometimes get pulled into this. And so my whole thing with the credit cards is this is like a Band-Aid. It maybe helps that people who are in this churn right now, and there's no doubt it's a tough time with costs and everything. But long term, I don't know that it solves the problem that we have of kind of an over-indebted society.
Yeah, absolutely. I'll